30%, that is how much of your military pay can land in your account completely tax-free. Real money the tax man never touches, and most troops never add it up or claim all of it. There is one allowance hiding in that pile that the pay charts list as free money, but the tax man quietly takes a cut of it anyway. We will name it before the end.
Hi all, I'm Erica, and the number River just gave is real and it is documented. Base pay is taxed. Most allowances are not, and that gap changes what your paycheck is actually worth.
Today we go deeper than housing. Everyone knows about BAH. We are walking through the rest of the allowance stack that decides your real take-home.
Hey everyone, Nora here. Line them up and a pattern appears. BAH, BAS, OHA, overseas, family separation, and the dislocation payment on a move all skip income tax.
Fenrir here, and I want to poke the happy story right away. Not every allowance is tax-free. There is one that looks like the others and is taxed as wages.
That one is the Continental Cost of Living Allowance, and Fenrir is right to flag it. We will get there. For now, hold the core idea.
Here is the core idea. $1 that arrives tax-free is worth more than $1 of base pay, because base pay loses a slice to federal, state, and payroll tax before you ever see it.
On the taxed side sits base pay and the Continental Cost of Living Allowance. On the tax-free side sits housing, food, overseas housing, separation pay, and the move payment.
Look at that board. 5 of the 6 big allowances live on the tax-free side. The Continental Cost of Living Allowance is the lonely one on the taxed side, and that surprises people every year.
And that is the whole game. Once you know which side a payment lives on, you can stop treating every line on your statement as the same kind of money.
Nora, before I take us into the food allowance, let me bring in a question we see under almost every pay video.
Yes, and it is the one everyone whispers. Why is my W-2 thousands of dollars lower than what my pay statement says I earned this year?
Because the tax-free allowances never touch box 1 of that W-2. Coming up, the food allowance, where enlisted out-earn officers, the overseas pay that works nothing like BAH, and the $300 check most members forget to claim. Start with the allowance everyone earns and almost nobody studies. Basic allowance for subsistence. It exists to cover your food.
And here is the fact that stops people. Unlike almost everything else in the military, this is one payment where the enlisted member receives more than the officer. The structure is upside down from what you would expect.
For 2026, the enlisted rate is $476.95 a month. The officer rate is $328.48. Both took effect on the first day of January.
Hold on. Why does the lower rank get the bigger food check?
It is not an accident, it is history. The rates trace back to different feeding assumptions for officers and enlisted decades ago, and Congress froze that structure into law. It is flat by rank inside each group.
And the yearly change does not follow the basic pay raise. The department adjusts it on United States Department of Agriculture food cost data. In 2026, that meant a 2.4% bump.
Enlisted sits at $476. The officer rate at $328. Side by side, the size of that gap is the part that sticks. That is about $148 a month more for the enlisted member. Over a year, that is roughly $1,800, and every cent of it is tax-free.
Here is the catch nobody mentions. If you are required to eat in a government dining facility, your pay office can dock that allowance. So the full rate is not automatic for everyone.
True, and that is the honest counterweight. For most members living off the installation, it arrives in full. For a single soldier in the barracks on a meal plan, it may not. Check your own status, do not assume.
But notice the through line. Even the food allowance is tax-free, which means its real worth is higher than the sticker number. Erica, that is the math we should actually run.
It is, and it is the most misunderstood point of the whole topic. Let me put real dollars on the board next door.
Let me pause for just a second, because this genuinely helps. If you are getting value here, hit that like button, then subscribe and ring the bell. It costs you nothing, and it is the single biggest thing that keeps these videos coming.
Now cross an ocean, because the moment you PCS overseas, the housing rules change completely. Your BAH stops, and a different allowance takes over.
Before we name it, Erica raised the question this whole scene answers. Erica, put it to the room.
Right, here it is. When I move overseas, what happens to my housing pay, and is it still tax-free like my BAH was? That allowance is the Overseas Housing Allowance, OHA. The key difference is that BAH is a fixed amount you keep whether your rent is high or low. OHA is a reimbursement.
It pays your actual rent up to a location ceiling, then adds a utility and recurring maintenance amount, and a one-time move-in payment for deposits. If your rent comes in under the ceiling, you do not pocket the difference.
So overseas you cannot game it by renting cheap and keeping the gap. That is a real behavior change from the stateside housing allowance.
Correct. Then on top of housing comes the Overseas Cost of Living Allowance, which offsets higher prices for everything else, and it is tax-free. It moves through the year as exchange rates shift.
And here is the trap Fenrir flagged in the cold open. The stateside version, Continental Cost of Living Allowance, is taxed as wages. Same family name, opposite tax treatment.
Wait, 2 cost of living payments, one free and one taxed?
Exactly that. Overseas, it is tax-free. Stateside, it is taxable. In 2026, about 127,000 members will share roughly $99 million of the taxable stateside version.
So let me prove why the tax-free label is worth chasing. Picture an enlisted member with $2,000 a month in tax-free housing pay. Watch what that is really worth before tax. Start with the $2,000 of tax-free housing pay. That is the real money in hand.
At a 22% federal bracket, taxed base pay would have lost about $440 to reach the same take-home.
And do not forget the payroll tax. Another roughly $153 in Social Security and Medicare that allowances simply never pay.
Add it up, it would take about $2,593 of taxed base pay to equal $2,000 tax-free. That spread is the hidden raise nobody prints on a recruiting poster.
That is the lesson of the whole episode in one number. Now the question is which of these you might be leaving unclaimed, and that is its own conversation. Let us bring this home. We have covered the allowances you get automatically. This last stretch is about the money people fail to claim, the allowances that need a trigger and a form. Erica, Nora, no debate here, just walk the room through what gets left on the table and why. Start with the one that quietly went up this year.
That is Family Separation Allowance, FSA. For the first time in more than 20 years it rose, from $250 to $300 a month in 2026, under this year's defense law.
And the timing is the whole point. You qualify once you are away from your family for more than 30 straight days on orders with dependents who cannot be with you. Day 31 is when the clock pays.
It is $300 a month, tax-free, and for a partial month it prorates at $10 a day. Over a 6-month deployment, that is roughly $1,800 that some members never even ask about.
Nora, the other forgotten one, shows up on a move, not a deployment.
Dislocation allowance, the relocation payment on a permanent change of station. It is a one-time, tax-free lump sum, and it scales by rank and whether you have dependents. An E5 with dependents sees over $3,500 in 2026.
But it is not automatic in every case. A single member moving into government quarters at the new base may get nothing, and you generally get it only once per fiscal year. So the trap is assuming it just appears.
And the deeper trap is sequence. The dislocation payment and your travel claim are separate filings. Miss the paperwork window and you are chasing money that was already yours.
So let me give the honest verdict, because there is a real fork here. Chasing every allowance is not free of effort. And one of them, the stateside cost of living allowance, is taxed, so it is not the windfall it looks like.
Agreed. The smart move is not to assume you are owed everything. It is to learn which allowances your situation actually triggers, then claim those on time and in writing.
Walk away with this. Treat your pay statement as a checklist, not a receipt. The food allowance, the separation pay, the move payment, the overseas housing, those are the dollars people most often forget. Most are tax-free, one is not, and knowing the difference is the win. Core takeaway, about a third of your pay can arrive tax-free, so a dollar of allowance beats a taxed dollar of base pay.
Tonight, pull up your own pay statement and tick off every allowance line you have. Each one you confirm is money future you keeps.
Next time we open the move itself, the full PCS money trail, where the one entitlement that pays you to pack out quietly hides on the wrong form.
Send this to the friend at day 29 of a separation who has no idea $300 a month kicks in at day 31.
If this made one line on your statement make sense, hit like and subscribe so we can keep building this military pay series for you. And one for you. Which allowance did you not know you qualified for until today? Tell us in the comments so the next member learns it too. Less noise, more signal. Until next time.
8.8 River. I would say a 9, but I want you to keep trying harder next time. This is Professor Erica. Thanks for watching and signing off.